Hi again, Randy Pfeiffer with Active Insurance Solutions. Today's topic will be the individual mandate under the Patient Protection and Affordable Care Act. Well, beginning January 1st, 2014, all U.S. citizens will be required to be covered for health insurance. Two ways to go about it: continued coverage through your employer-sponsored plan, or you paying individually on your own. In any regard, enrollment will begin October 1st, 2013. Well, who's going to be paying for the plan? And what are the qualifiers for those subsidies that people have been talking about? Well, if you're a single taxpayer and earn over $43,200, or if you're a family of four and earn over $88,200, bad news, you're going to be on your own for premium payment unless you do have an employer-sponsored plan that's providing coverage for you. Underneath these income limits, government subsidies will be available, one of which is a tax credit for premium payments. The other will be a subsidy as a reduction of your cost share under the plan that you choose. If you're at 133% of the federal poverty level, your cost for coverage cannot exceed 3% of your income. That goes up to 9.5% of your income at 400% of the federal poverty level. Anything above that, no subsidies will be available. The tax credits that can be received are going to be based on premium payments for what's referred to as the second lowest cost silver plan. I know that's a mouthful, but in general what that means is that the program is going to cover approximately 70% of covered essential benefits. I'd like to go through an example right now, and I want to introduce you to Pat. Pat's 45 years old, has an income of $28,700. Pat's income represents 250% of the federal poverty level. Using a premium of $400 a month, which will be an assumed cost for the second lowest cost silver plan, that's $4,800 annually. Now, Pat is not required to pay any more than 8.05% of income, which is $2,313 a year, or about $193 per month. The annual difference there is $2,487, and that represents Pat's tax credit that is refundable when Pat does tax returns. The other way to get this credit is under an advanceable basis at the time you apply for coverage. In addition, Pat has available a cost share subsidy. Pat's cost share maximum, also referred to as an out-of-pocket expense, for the silver plan is $5,950. Based again on Pat's income, Pat can get a subsidy of 50% of the cost share for things like deductibles, co-payments, and co-insurance under that silver plan. In summary, Pat makes $28,735 a year, will pay $193 per month for coverage that will have an out-of-pocket maximum of about $3,000. This is one example for rates, and those rates are going to vary based on the area that you're in. In Pat's example, is this affordable care? You decide. Until next time, good health, that's the plan.